week since the conflict in the Middle East began, and the government is now rolling out measures to manage rising fuel costs. Malacanang said President Bongbong Marcos will ask Congress to grant him emergency powers to temporarily cut fuel excise tax as global oil prices remain volatile. Palace Press Officer Claire Castro said the Energy Department is set to submit the formal request to Congress as early as today. She also revealed that the agency has issued show cause orders to 54 gasoline stations accused of raising prices even before any official adjustment was implemented.
Issue po ang DOE ng show cause order sa 54 gas stations para po makita natin kung sila ba ay lumabag sa panawagan na huwag magtaas ng presyo ng gasolina. Kasi kapag po nakita rito na sila po ay may mga fraudulent acts, maaari po silang makansela ng permit.
Over the weekend, the Energy Department directed oil firms and gas stations to strictly follow existing fuel prices and comply with anti-hoarding rules, while authorities continue to monitor global oil market developments. Energy Secretary Sharon Garin also clarified that no fuel price increases should take place until Tuesday, March 10, warning against profiteering. President Marcos likewise appealed to traders and business not to take advantage of the situation.
Kikiusap ako sa ating mga negosyante at mga trader, huwag ninyo sanang samantalahan ang sitwasyong ito. Pinapaalala ko sa lahat na ang hoarding at ang profiteering ay labag sa batas.
Last Friday, Topline President and CEO Eric Lim said oil prices are coordinating with the government to stagger possible price adjustments to help ease the burden on consumers. In a related development, a 4-day work week in executive branch offices takes effect today, a temporary step aimed at saving energy and reducing fuel consumption as global oil prices remain uncertain. As global oil markets react to the escalating conflict in the Middle East, Filipinos are bracing for what could be one of the sharpest fuel price hikes this year. Let's check the situation on the ground. We have mobile journalist Arles de los Santos reporting live from Taguig. Arles, good morning. Are there already concerns about fuel supply at local gas stations?
Kasi so far sa ating pag-iikot kung sa iba't ibang mga gasoline station sa Kamaynilaan ay nakita natin na mas maikli na ang pila sa mga gasolinahan kumpara ito sa nakita natin kahapon kung saan hindi lamang sa Metro Manila ito naranasan kundi sa kalaptig din ng mga probinsya ng Cavite at sa Batangas. Pero ngayong araw kasi ay nagpapatuloy ang inspeksyon ng Department of Energy sa mga gasolinahan sa Kamaynilaan bunsod ng mga ulat na mas mataas na nga ang presyo kada litro ng mga produktong petrolyo kahit na sa Martes pa. Inaasahan na maglalabas ng bagong bulletin ang DOE para nga sa suggested price retail ng mga produktong petrolyo kung saan nga naunang nasampula ng isang gas station sa Pasig City na hinainan nga ng show cause order ng DOE dahil sa hindi umano pagsunod nito sa tamang presyo ng mga produktong petrolyo noong March 6 at 7. Kasi base sa inspection report form, lumalabas na 79 pesos ang presyo ng diesel sa nasabing gasolinahan mula sa dating 51.98 pesos lang o 54.1% na mas mataas sa dati nitong presyo. Sunod na pinuntahan ang X-Infinity gas station sa Commonwealth sa Quezon City na hinainan din ng show cause order. Binigyan ang dalawang kumpanya ng 24 na oras upang magpaliwanag at kung mabigo nga ang mga ito, posible silang kasuhan at masusunod din, possible din kasi na kanselahin nga ang kanilang mga lisensya personal na hinatid at nag-iikot sa DOE Undersecretary Felix William Fuentabella. Inaatasan ng DOE ang lahat ng oil companies at gasoline stations na mahigpit na sumunod sa fuel pricing rules at iwasan ang hoarding o anumang unauthorized na pagtaas ng presyo. Yan ay dahil posible silang makasuhan sa paglabag sa batas pambansa at yung mga lalabag ay maaari ring patawan ng iba pang mga parusa, both criminal and administrative charges. Cathy.
Arles, may napabalitaan ba tayong 80 pesos kada litro dahil ito yung pumapasok na balita? Meron ba tayong kumpirmasyon doon?
Yes, Cathy, we confirmed that. We've seen that sa ilang mga gasoline station doon sa Cavite at sa Batangas kung saan yung diesel na mga petrolyo nila ay umaabot na nga ng 82 pesos. Yung iba naman na premium and regular no na mga gas ay umaabot na ng halos 70 pesos. Malayong-malayo na yan no doon o sobra-sobra na doon sa dapat na halaga lamang yung at least sa diesel ay dapat nasa 49 pesos to 66 pesos lamang. Pero kung nasa 82 pesos, that's I think more than 20% of the price increase, no? So kinaalarma ito ng Department of Energy, kaya ngayon ay talagang puspusan ang kanilang pag-iikot at pag-monitor sa iba't ibang mga gasolinahan para nga masiguro na hindi i-take advantage ng mga gasolinahan itong nangyayari at maaaring posible no, na krisis sa petrolyo dito sa ating bansa. Cathy.
Okay, maraming salamat sa ulat. Arles De Los Santos reporting live from Taguig. Global oil prices surged past $100 a barrel for the first time in 4 years. Benchmark Brent crude trading at $109.65 per barrel, jumping by over 18%, while West Texas Intermediate hits $109.93 per barrel, advancing by nearly 21%. It is the first time both benchmark crossed $100 per barrel since July 2022, when Russia-Ukraine war rattled energy markets. Oil prices stayed above the $100 mark for almost the entire period between February and July 2022 until fears of a global recession tempered demand, bringing down prices. The recent oil spike shows traders are increasingly worried about the accessing oil and gas in the Persian Gulf. Iran's Revolutionary Guard said Friday that the Strait of Hormuz, a narrow waterway connecting the Persian Gulf to the Gulf of Oman and the Arabian Sea, remains open. They would only target American-Israeli ships, a turnabout from their pronouncement last week that they would burn all transiting vehicles. Meantime, Iran has named its new supreme leader, Mojtaba Khamenei, the son of the late supreme leader Ayatollah Khamenei. Mojtaba has been chosen by Iran's Assembly of Experts, composed of 88 clerics. Although Iran frowns on the principle of hereditary succession, Mojtaba has deep ties with the Revolutionary Guards. Over the weekend, Israel bombarded Iran's fuel depots for being allegedly used by Tehran's military. Thick smoke rose over the Iranian capital as oil storage facilities and refineries were hit. U.S. President Donald Trump refused to outline conditions for ground troops deployment, while Iran's president promised not to bow to external pressure.
What are the circumstances where you'd send in ground troops?
I don't even want to talk about it now. I mean, that's, I don't think it's an appropriate question. You know, I'm not going to answer it. Could there be? Possibly, for very good reason. Have to be very good reason. And I would say if we ever did that, they would be so decimated that they wouldn't be able to fight at the ground level.
Our Iran and our country will not bow easily in the face of bullying, in the face of oppression, in the face of aggression, and have not bowed. And it is not possible that our heroic nation will retreat easily in the face of threats that they make.
Today has done up the numbers and estimated that every $10 increase in oil could shave up to 0.4 percentage point off Philippine GDP. With us now for more is the Group Chief Economist of China Bank, Dominique Velasquez. Good seeing you, Dominique. Welcome to the program.
Good morning, Cathy.
And at a time, $100 per barrel of oil has already been breached.
Correct.
I know that you're
news since the weekend, over the weekend.
Indeed. So how does that rig your estimates? I mean, you're coming all the way from $80 per barrel.
Correct. Actually, earlier part of the year, we were coming from around $68 per barrel, right? But, you know, it could be short-lived. Hopefully, we want it short-lived, right? This $110 or $100 per barrel. Our estimate, we assumed that $80 per barrel for the rest of the year. So that's, I guess that's an assumption. Most analysts are expecting the war to be maybe 4 to 6 weeks, hopefully. So that's sort of just a scenario that we're putting out.
Right, and that also concerns the transmission mechanism. I wanted to pull up the chart you prepared for us here because your baseline's 70.
Yeah.
But now we're working on 100, and that really has a big impact on GDP. My introduction said 0.4 percentage point, but we're way off that. We're at 1.2% minus for GDP.
Yes.
So how do we work that out in the transmission mechanism to the sectors most impacted because they're energy intensive?
Correct. So just to maybe give a background, so our forecast is around 4.9% GDP growth for the year. So a little bit slower in the first half of the year and then a pickup in the second half of the year. However, this one is assuming a sustained 100, the 1.2 percentage points is a sustained 100 until end of the year. As mentioned, hopefully it does not end up into that. I guess if we look at GDP, there are two channels that we can identify. So first is the household consumption. So as oil prices rise, people have less disposable income for essentials, for non-essentials. So you remember in the fourth quarter of last year, household consumption fell to less than 4%. So we might see pressure on that. And then the second channel is what you mentioned. It goes to productive sectors. So prices of other goods also increase with a sustained increase in oil prices.
And where does the peso come in? Because as we were coming to the show, we reported that the peso has opened at one of its weakest in history. And if we pull that up, we're looking at 59.25 at the open from a previous close of 59.
Yes,
If
correct.
we breach 59.45, that will be the weakest in history. So what impact would that have on the transmission to the consumers, to the economy and industry?
That's correct. You know, a weaker peso per se does not, it's really just a price from supply and demand, right? But a weaker peso, because we import a lot of goods. So, for example, oil. We import most of our oil needs. So it increases our import, it reduces our, it increases our current account deficit and puts another pressure on the peso. And some other items, for example, rice. We import 20% of our rice needs. So that would increase with the depreciation of the peso.
Let me take a look at the PSCI because I'm told that it is down nearly 2%. I know that before the Middle East conflict, you were very positive about equities. But how does the pecking order now change when it comes to asset allocation and the government bond curve and also the peso?
I think if you look at the financial markets, a little bit more bearish than, let's say, 2 weeks ago, right? We saw the PSEI climb to 6,600, and now it's, I don't know, 6,000, maybe less than 6,300. I think this is compounded by weaker global economy, possibility of BSP not cutting policy rates anymore or might even hike policy rates given a sustained increase in oil prices. Similar to government securities, we've seen an increase in yields in the past few days.
Well, let's take a look at the BSP's internal modeling because they came up with the scenario building on inflation. Really interesting because they baselined at 3.6%. If we could pull that up, we're well beyond it already with oil at 80, 90, or even 100. Let's take a look at the second graph because it's more definitive from the Banco Central. It really says here that if it's $100 a barrel, inflation's going to be at 4.6.
So
This year and 4.7 next year, well beyond the BSP's inflation target range.
Correct. So they came up with this projection. They released this during the February monetary policy meeting. So Dubai oil was then around $68 per barrel. So this one assumes, as mentioned, maybe March to December. So let's say $110 per barrel from March to December on average. We're not at that level right now, right? We're at that one day at $110 per barrel. So 4.8% is sort of an extreme scenario.
An inflation overshoot.
Yeah.
How possible is that and how extreme might that be?
Not so likely. So now they're at 3.6%, similar to ours in China Bank. We're assuming a 3.6% average inflation for the year. But, if we look back at the Russia-Ukraine war, we saw inflation increase substantially given how, or depends on how protracted the war will be, right? So we saw inflation 2022 at 5.9 and then 6.9%. In 2023.
All right, so that's the monetary policy lever. Let's talk about fiscal, because this is what we've been waiting for, the catch-up spending, and that's now been derailed, if you will, by the Mideast conflict with oil hitting over 100. The government's planning fuel subsidies and also possible excise tax cuts. To what extent do you think that might help temper the expected shaving off from the GDP because of these measures?
I think, the transport subsidies, that will be most effective. So if you look at the CPI basket, the share of gasoline and diesel is around 2%. The share of road transport is around 4.5%. That's your cost in riding the jeepney, the tricycle. So that's a larger cost. So right now there are calls for a 2 peso increase in, let's say, jeepney and buses. So that will have impact in GDP. So addressing the concerns of the transport sector immediately would be most effective, I would say, as opposed to maybe a rollback of some excise taxes, which usually, benefits the higher income segment. So for the middle, lower income, I would say that the transport subsidy would be more effective. So, stalling any rate increases, jeepney fare hike increases would actually be effective.
Which takes us to employment, wages, and the transmission of higher oil, impacting margins. I've had conversations with CEOs on how that might affect OPEX. How fast will we feel maybe job cuts? Or maybe even people not being able to pay back debt in banks?
Well, I'm not so sure, but again, this depends on how long the war will be, right? I would say that, this is not a base case scenario for everyone. We didn't expect this at all during the end of 2025 and the start of 2026, right? So it might be a little bit difficult to say right now, but companies would really have to cope with higher OPEX.
If we pick maybe a few lessons from COVID, because we also didn't expect that would happen, would there be any that would be helpful for our policymakers and markets?
I guess from COVID, one is that likely there will be a lot of overseas Filipinos coming back to the Philippines, right? We've heard some of them wanting to be repatriated back to the Philippines. So I guess jobs. So there's a need for jobs for those who will be returning. There's a loss of income. There's a loss of remittances that will be happening, right? So retooling and reskilling. Possibly some financing scheme for some of them to start businesses here in the Philippines would be effective also.
How do we now compare with the ASEAN? I mean, we're looking at numbers below 5% for GDP. Are we still attractive for and if and when those foreign fund flows come back?
Yes, I think if you look at the start of the year, we've seen some increases in interest in the Philippines. 4.4% last year is a little bit lower than our history. But if you compare with ASEAN, I think that's very decent. If you compare with the rest of the world, it's still very decent. And that 4.4% last year, it was really a fiscal constraint. So the government is saying that they will spend more this year. They will spend the whole budget. So we see an upside for this year.
But we're also fuel importing.
Correct.
So that's
correct.
a bit of the
Yes.
downside, would you say?
Yes, it is. It is a downside. As mentioned, if we address it through the proper subsidies, targeted, time-bound, it might not be a fiscal drag, and we can spend more on other priorities.
Having come from the DOF before you came back to the private sector at China Bank, if they were listening right now, what do you think would be the most important policy move that they would make in, say, the next 30 days?
All right, in the next 30 days, I think the rollout of those subsidies. So I'm looking back at 2025. We did have that in the GAA, that subsidies for transport workers, for agriculture workers, for fisheries, because they also use they're also very oil dependent, and you want to support that segment. So I guess faster rollout for those segments. So I think, if I remember correctly, there's still some, allocation left behind in 2025, and the budget is, you can use it for 2 years. So you can still use it for this year. So that's an advantage. I think, medium term, there is a biofuel mix that the DOE is promoting. Currently, I think it's at 3% mix with the gasoline. So that should, increasing it up to 4%, 5% should also, reduce our oil dependence.
All right, tenuous times, but thank you so much for
Thank
making
you.
sense of it all.
Thank you.
Dominique, I really appreciate it. Dominique Velasquez of China Bank. Well, you're watching Money Talks coming up. So what does higher pump prices mean for our utility bills? An excerpt of my exclusive interview with Ramoncito Mon Fernandez when we return. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. President Bongbong Marcos has arrived in New York for a two-day working visit to the United Nations. The president is expected to present the Philippines' position on the Middle East conflict. He will also campaign for the country's bid for a non-permanent seat on the UN Security Council for 2027 to 2028. According to the palace, the position would give the Philippines a stronger voice in global peace and security discussions. However, some critics have questioned the timing of the trip as the Middle East tension continues to escalate. Let's check in on the markets. U.S. stock futures tumbled to start the week's trading. Rising oil prices are threatening an economic slowdown. The Nasdaq drops 2.2%, the Dow falls by 1.9%, and the S&P 500 declines by 1.8%. Asian markets plunge at the onset of Monday's trading. South Korea's Kospi down 7.2%. Japan's Nikkei 225 tumbles by over 6.6%, and Australia's ASX 200 slides by 4%. U.S. equities fell on Friday after the economy lost 92,000 jobs in February, worse than economists expected gain of 50,000 positions. The Nasdaq slid by over 1.5%, S&P 500 declined over 1.3%, and the Dow dropped by nearly 1%. Asian markets, a mixed bag last Friday, with Hong Kong's Hang Seng up 1.7%, then Japan's Nikkei 225, 0.6% up. South Korea's Kospi ended the session virtually flat, and Australia has tumbled by 1%. The 10-year U.S. Treasury yields ticked down to 4.131%, and gold prices jumped to $5,146 per ounce. And a quick check on our own markets. We've already said the opening of the Philippine peso. Let's take a look at the PSCI. We've also opened lower, nearly 2% now, 6,198, below the 6,200 mark. The stock market ended in the red Friday, down nearly 1% due to the cautious trading brought about by weak global sentiment. Analysts see continued downward bias in this week's trading, with Unicapital Securities saying investors will continue to monitor global developments and assess their potential impact on inflation and risk appetite. Let's have another look at the Philippine peso. It opens today weaker to one of its weakest in history, 59.25 to the dollar. The peso closed on Friday 59 flat against the greenback, the worst finish in over a month, reflecting persistent demand for the dollar amid geopolitical uncertainties. And the 10-year government bond yields have ticked up to 6.318%. Rising oil prices linked to tensions in the Middle East may gradually affect operating costs for some utilities. In an exclusive interview, Maynilad President and CEO Ramon Fernandez said electricity is one of the company's major expenses since water services rely heavily on pumping, treatment, and distribution systems. However, Fernandez said the impact of higher oil prices on Maynilad's overall costs is not expected to be significant, as power accounts for only a low double-digit share of total operating expenses. He added that the company is also investing in energy efficiency measures to help manage rising energy costs.
I think slowly within the year, we will definitely see some effects of power, but to your point, we believe that it will not be too significant. The majority of our costs are still on manpower, chemicals, and also spare parts and repairs and maintenance. So it's just one of the main components.
Catch the full interview tomorrow on Money Talks at the same time. That is it for the show. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. Kapatid, we are one news, all sides, all the time. Have a great day ahead.